It's 17,500 on the Nifty. The 200-day exponential moving average, which was at 17,550, has been breached, and we're well below that. 17,500 now approaching a 400-point knock on the Nifty. The Sensex lower by nearly 1,100 points. We were looking at some recovery in the Adani Group names. So the Adani stocks are recovering, but the markets are moving southwards, and that journey continues even now. Deven Choksey is with us on the show, and we've also got Rajesh Ravi of HDFC Securities. Deven, what has happened today? Could you tell us what you've picked up? Are you seeing a lot of people who are trapped? Is there, margin calls which are being triggered? What has happened in the markets today?
Well, I think on first part, the panic got created because of a sharp fall into the Adani Group stocks. And I think the larger part of the fear kept in the minds of the traders was largely coming from a fundamental question that how could the instruments like non-Indian listed equities, I think, get traded offshore, where I think it is not, the volume is not getting reflected in Indian market. And how could I think that instrument result into such a massive short selling into the markets? Second fear which came out from the traders' mind was that suppose if today this particular stock has this particular group of stocks have got victimized, how would the market take care of the situation going forward for other stocks? So these are few questions started coming in the morning itself, I think, from the traders. And I guess I think that probably I think ruled the mind of the trader with panic. As a result of which I believe I think the larger part of the offloading has taken place on the long side of the position which people carried. Remember that we are just 3 days short of budget, and as far as I think the market is concerned, possibly I think this has also I think kept them nervous, and as a result of it, this sell has taken place. The second part of the fall, as I see it, I think came largely because of the pressure coming in on the mark-to-market side on the derivative contracts. Because of such a vast fall, including in the bank stocks, where the long position is created, I believe, I think that is where probably people are forced or traders are forced to offload the long positions. And that has also, I think, compounded the complete fall in the market at this point of time. So largely in one line, one can summarize, I think it is a panic, I think, which has ruled the minds of the market today. And that is the root cause of this particular fall at this point of time.
Okay, by the way, the Nifty is down 380 points, and Adani stocks, for example, have come under some more fresh leg. I mean, Adani Ports, for example, the low on Adani Ports was 540, which was made around 12:50, a little before 1 p.m. And then from 540, it rallied to 627. And then it's kind of sold off again to where it is now, which is about 590 odd rupees or so. And I think similar is the case with a lot of other names which did see rallies. I think Adani Transmission, Adani Green are some of the other names which did see small bounces, but which are getting sold into. Adani Transmission, maybe we can pull up. It got to about 2730, which is around 1250 or so. Like Adani Ports, rallied back to about 2960, 2970, and has now lost about 150 rupees very quickly to 2800 rupees once again. So that's basically what we have going right now. Rajesh Ravi is with us of HDFC Securities. He's, of course, he tracks the cement space, and Ambuja is in focus. Rajesh, good to have you with us here. Thank you very much. How would you characterize the fall? Where does the stock now come in your kind of valuation radar, your Excel sheet? What is it telling you? I mean, after the fall.
Yeah, hi, good afternoon. Obviously, the fall is quite sharp, given the concerns which have been going around for past 2-3 days. However, both ACC and Ambuja are in themselves quite well-managed companies, which is acquired by the Adani Group. And I don't see any business risk to these companies in terms of their market mix, their volumes, in terms of their profitability. They were already operating at very high utilization and were making decent profit margins. With Adani taking over, there are thoughts and hopes and expectations that the company will gain both in terms of size as well as in terms of their operating metrics. It will further improve. Now, obviously, the bigger concerns which may be hitting the price for these companies would be the inorganic growth stories may take a pause. and maybe that is what the stocks are. The stocks have fallen sharply, because what is happening is that the broader thought which got the Ambuja re-rated was that it would be able to do acquisitions in organic at say $100-$120 range, and which in turn would get re-rated at $180-$200 valuations, whereby the equity infusion supported that thought process, and the stock rallied one way closer to 600 rupees. So while the current fall in our view is quite sharp, given that Ambuja is a going concern company, and even if inorganic acquisitions do take a pause in the bearish case scenario, I don't see that should have a very big impact in terms of its organic growth plans, which may only accelerate even before
Rajesh,
Adani.
Rajesh, appreciate your thoughts, on the group, but we're running a little short on time, Rajesh. You were in the minority camp that had a reduced rating on Ambuja, right?
Correct.
And you seem to have got it correct. Now the stock is close to around 100 rupees, lower than your target price at the start of today. Since it is so much lower, do you believe now that, you will change your stance at these sort of valuations? Will you be positive on both these two? In fact, the prices you're getting it is lower than the open offer price as well. Go ahead, Rajesh.
Exactly. So you're right, and the current price, and that is where I was coming to. The fall is quite sharp, and given that the franchise are well managed themselves, and it will only gain more strength under the new promoter, we see that these upsides, the stocks both have, ACC while itself was offering upside even then, no much change in the thesis even with the ongoing issues. Ambuja, even if the new expansions are delayed, we still believe this fall is unwarranted and the stock will spring up from here on. So our current target price is 480 rupees, which also is premised on most of the expansions which we have built into it. Even if we cut short of those expansions, even then we believe the current price of 370-380 rupees is significantly on the lower side. The stock should rebound to north of 400 rupees from here on.
Okay, so you're turning a little bit constructive at these prices. Rajesh, very quickly,
Yes.
Ultratech versus ACC Ambuja, what's the pecking order between the three?
So among the three, I would still be positive on Ultratech, because that is one, we have been telling this since long that they have been in this business, investing into not only growth but into refurbishing the existing plants and thereby and their distribution. So they are very aggressive both in trade and non-trade markets. They have strong, quality assets which they have refurbished, even the older ones. So we remain bullish on Ultratech among the three.
Okay, all right, Rajesh, appreciate you stopping by and giving us your view on the space as well as on all these three stocks. Thanks so much for stopping by. Well, Nimesh has joined me. Nimesh, what are you picking up with regard to market setup? As well as the Adani Group stocks, you're tracking a couple of factors. Run us through that as well.
That's right. So first to talk on the Adani Group stocks, I just highlighted some of the fundamental reasons one needs to focus on. While, of course, we all know that there is a panic selling, stocks were down 20%, 25% circuit as well at one point in time. Most of the Adani Group stocks have recovered 8 to 10%, 15% from the lows. But, a few important things to watch out for individual companies now. To start with, first on Ambuja Cement, the current price is around 385, exactly the price at which the promoters bought from Wholesale and made an open offer at. The open offer was at 385. But do remember, the promoters are willing to infuse money into Ambuja at a price of 418 rupees per share. Still, it's below that price as well. So, in fact, intraday the stock hit a low of 350 as well. So, that was kind of a panic from where it has bounced back. So, as far as Ambuja is concerned, that's something to watch out for. We heard the analysts as well talking about fundamentally now it's become attractive. Even Nirmal Mang put out a note in the afternoon, and they have a buy recommendation on Ambuja Cement. Now, coming to ACC, again for ACC, if you look at the open offer price of Adani's, that was at 2,300, and the stock is way below 1,900. So, even from that point of view, there was a bit of, that's something to track as far as ACC is concerned. Coming to the third stock, which is Adani Port. That stock has sharply recovered, almost 13% from intraday lows, and now it's back above 600 levels. But if you look at the Kotak note today morning, they upgraded the stock to buy from AD. They have a target price of 860 on the stock. But from a fundamental point of view, if you look at the valuations now, it is found below 11 times, FY24 EV/EBITDA. So that's the reason why you might have seen some bit of reaction or some bit of pullback in Adani Ports in today's trade. And the last stock is Adani Enterprises. That's going to be very, very important to track for the next couple of hours. The FPO starts today, but the price is now fallen below the FPO price band. So the price band is between 3112 to 3276. And remember, the anchor investors have come in at 3276, which is at the upper end of the price band, and they have committed 6,000 crores. So half of it, which is 50%, 3,000 crores will come in. What happens to the FPO is a big question mark. That is something we need to track very closely for the next couple of hours. But that again, for Adani Enterprise, that's an important trigger to watch. That the FPO price band is between 3112 to 3276. So that's broadly on the Adani Group stocks. There were some important triggers to watch, and I guess market have taken a note of it. And from there, you've seen an intraday recovery of between 8 to 11%, 13% in most of the Adani Group stocks.
Okay, got that. Thanks very much for all the details there. So the entire Adani Group, along with, of course, Ambuja and ACC in focus today. Deven is, of course, still with us. Deven, just moving beyond this group of stocks, want to draw your attention to, of course, the huge fall that's happening across banks. Now, we know that there's been a big rally last year. If you were to buy into this decline, what type of banks or even non-banks would you go for?
Yes, Surabhi. I think very clearly the likes of ICICI, likes of HDFC and Axis would be the preferred choice in the portfolio, along with Bajaj Finance, because most of these stocks have got inherent strengths of business. Their portfolio is widely distributed across retail, across, I think, corporate loan book side, including working capital. And in my viewpoint, I think they are fairly stable as far as I think their business outlook is concerned. So from that perspective too, I would think that I think they are relatively better choice of banks to buy into the portfolio. Current price correction, though it's been very sharp in most of them due to whatever the fear factor that we talked about, I feel that I think they are remaining among the top picks as far as our portfolios are concerned.
Hi Deven, this is Nimesh. Within the Adani Group, Deven, what would be your top picks? Because I just highlighted some important triggers to watch as far as the stocks are concerned. Anything which has become very attractive now from a valuation point of view? Any of the Adani Group stocks, especially the F&O names?
Precisely, Nimesh. I think Adani Port remains, I think, a very comfortable story.
Sure.
Underlying asset base is absolutely strong and convincing. The port business itself is growing. And I think the company is reasonably, corrected as far as the prices are concerned, reasonably giving an opportunity to own around 25-30% return, I think, without taking too much of a risk. So from that perspective, I think this particular story remains more convincing. Rest of the companies remain, I think, quite good. I agree on the business fundamental side. However, I think the valuation perspective, Adani Port remains more comfortable to me at this point of time.
Deven, if it wasn't for the Adani Group stocks, the stock of the day today have been Dixon Technology and the kind of fall that we've seen. No doubt that the earnings are missed and they lowered the guidance in December and they further brought down their top line guidance. But what have you made of the numbers? And there was so much optimism surrounding Dixon Technology, the mobile opportunity, the PLI schemes. Is this the time to buy Dixon Tech, or what would be an attractive entry point now?
That is another problem in the market, that I think when market is fully convinced about the opportunities, they do not want to listen any kind of negative news. They do not want to listen any kind of corrective news as well. So from that perspective, I think most of the companies, I think, who have been premium traded, which includes Dixon Technologies, I think they are victimized because of that. Having said that part of it, I think the valuation is required to be moderated, which probably I think in this current fall is happening right now. In my viewpoint, I think leave aside, I think, one particular quarter, if overall performance of the company comes back to the normal level, I would say, then possibly in the corrected fall, the kind of companies like Dixon could be a buy opportunity. However, as I said, they are premium valuation. They require to have a little more moderation. Post that, I think one could possibly go for adding them into the portfolio.
Okay, got that, Deven. Thank you very much for giving us all that perspective this afternoon. You have a good weekend and we will touch base with you again soon. The market, nothing's really changing. You're still struggling. Of course, maybe just about a 20-point, 25-point flip up from the lowest levels of the day, but doesn't really move the needle much, does it? By the way, we spent a lot of time talking about the Adani Group and about banks. The other problem area for the market today is, of course, something like a Reliance. Look at the selling on Infosys, even on HCL Tech for that matter, Lever, all your heavyweights. Basically, not much beyond autos is batting on the upside. It's an all fall down. kind of a situation. That is this Friday afternoon. We'll take a very quick break on that note. On the other side, we go back to talking banks. Karthik Srinivasan of ICRA joins in. We'll try and make some sense of the sector, the fall that we're seeing today, current concerns, and of course, valuations.